Hey, welcome back, my passive income investors. I like to a deep dive review of my now $307,000 dividend stock portfolio for that juicy passive income. We're going over the stocks I bought, the stocks I sold, a little about Bitcoin, and of course, those tech earnings. So in the clarity of my transparency, do the channel a favor, smash that like button, and let's kick this off by taking a look at the general portfolio overview. Keep in mind, I live in Canada. That's like monopoly money. So the total portfolio value in US is closer to about $250,000. But taking a look at the biggest movements this week, I finalized my Google position. I picked up another 2 shares right after earnings. Maybe could have waited a little longer because it is pulling back still. On top of that, I scaled down my largest weighting. I talked about this yesterday, of course, being RioCan, which initially was making up 12% of the portfolio. Now it only makes up 8%, and I'm readjusting that capital into MPW, Medical Property Trust. And I haven't done it just yet. The total position or the capital I'm shifting over is about $12,500. And we can see this in my TFSA. Unfortunately, this cash takes about 3 days to settle. So by Monday, I should be able to transition that capital over. Other than that, folks, I did finalize my Algonquin Power position as well. We can see here that I bought another $5,000 worth, bringing the total position up to about 10K, bringing me in 441 annually. This obviously weighted down my entire cash position because I was sitting on around 20,000 in cash. I've weighted that down. It's worth about 5,500 now, or making up about 1% of the portfolio. So I do need to keep working on getting that cash position up. I also made a big pivot in my RRSP. I sold 2 stocks, being Lockheed Martin and a company called Kimberly-Clark. Now, a lot of you dividend people out there are like, why would you sell those companies? They're phenomenal, and I would 100% agree. But going into the pandemic, when I bought those companies, I really, in fact, wanted to buy a company called Clorox. But I couldn't wrap my head around the valuation at the time because Clorox was trading up huge. But lately, it's been trading down about 20%, and it's in a range right now where I would rather own it than those 2 other companies. And to kind of condense my entire portfolio here, I thought it would be better to just double down on Clorox because this also gives me more exposure to healthcare. I've been trying to encore some of my positions more leaning toward the healthcare sector because I'm really underweighted. And the only healthcare stock or the pharma stock I really like is Johnson & Johnson. And that's because it's like a diversified ETF that isn't like 100% focused on pharmaceuticals. Say something like a Pfizer might be, or a Merck company. And the reason I'm not buying those big giant pharmaceutical companies is because their earnings are very volatile, in my opinion. A lot of their drug segments will expire in several years, so they're constantly looking for new drugs. Whereas Johnson & Johnson like owns Tylenol, they own a lot of medical equipment sales. It's just one of my more favorite companies. So to try and get more exposure to healthcare, Clorox is an indirect way to do so through the consumer staples, and MPW gives me a much fatter dividend income while also leveraging, obviously, people that need to use hospitals and are likely even buying some of the equipment from, say, J&J. So I feel like that'll immediately impact really direct exposure to healthcare, even though it's not exactly seen on the overview, because taking a look here, guys, healthcare would technically with J&J only make up about 6% of the portfolio, but that is not accurate anymore. We can see right now in the sector portfolio weighting, tech is now the largest. And this was something that I was debating on going into earnings, but I feel much more comfortable here knowing what these companies are doing. So I'm going to keep this at about a 30% weighting. The only tech company I need to add at this point, sometime in the future, will likely be Amazon, because right now we finalized Apple, Microsoft, Facebook, Google, and Tesla, which I'm very happy with here. I will not be adding to those anymore. On the other side of the portfolio, all the other sector weightings are very nicely developed here. Obviously with the REITs coming in second place, and I'd rather have REITs being a larger percentage because I want growth, but I also want dividend income. Now from the sector weighting, this other pie chart I have over here just represents the dividend income allocation. And it was really scary because this was another reason I was on edge with RioCan, was because it was making up like 16 to 17% of my total dividend income, which to me was, again, a little overexposed for my personal risk profile. Now look, I'm still highly bullish on RioCan. Don't get me wrong, it just comes from a matter of discipline because you cannot go wrong being properly diversified. I was joking about this yesterday, is that when you have no money, owning 1 or 2 stocks isn't a big deal. When you have a lot of money, owning 1 or 2 stocks becomes a huge risk because those positions could technically ruin your life. And if, let's say, RioCan, for God knows what reason, just drops in half again, that would severely hinder my portfolio growth overall. But let's put that aside real quick and let's talk about some of these tech earnings, kicking it off with Facebook, because I already did videos on Google and Microsoft and Apple. Facebook beats earnings expectation but warns of a significant slowdown, which is just a CNBC bullshit headline because they're talking about a little slowdown, but for the scale of this company, they ain't slowing down by any means. So check this out. Facebook's revenue grew by 56% year over year in the second quarter. They saw an earnings of $3.61 per share against the expectations of $3.03. And they're just expecting a slowdown because everybody's going out again. But this slowdown is nominal because they're still expecting double-digit growth, which is just crazy. But I want to show you this quote that really caught me because this is where I see the future of Facebook really growing. Mark Zuckerberg was quoted saying, "In the coming years, I expect people will transition from seeing us primarily as a social media company to seeing us as a metaverse company. Advertising will probably be a meaningful part of the metaverse, and Facebook's goal won't be to sell devices at a high premium," he said. Zuckerberg's vision for the metaverse requires a sense of presence in the virtual world, which is why the company is investing heavily in Oculus division to build a necessary hardware. And crazy enough, Oculus and their hardware segments totaled $497 million in sales, up 36%. And I have a really awesome discussion with my buddy about this. Oculus is like one of the biggest advancements ever in virtual reality, and Facebook is trying to implement in-placement ads, and I don't even think that's going to be the real progression. Imagine you get into a virtual world where you can just own virtual things. It takes in-game app purchases to the next level, and I honestly think it's one of the most underlooked parts of Facebook's business model right now. So I don't care that they're going to see a slight growth slowdown. Even with the recent pullback in some of these tech companies, I really don't think it's deserved, because if any penny stock posted earnings like this, the stock would triple overnight. I mean, when you really think about Facebook sitting at about $1 trillion market cap, Apple over $2 trillion, for these companies to even move 10%, we're talking about hundreds of billions of dollars. So it comes as no surprise, even with Google slamming earnings, the stock is selling down because there's just not enough money supply to drive it up. But I think this is good because in the short term, it brings down the valuation metrics, making it a better buying opportunity for people like myself. Because I mean, just take a look at where tech is right now, guys. Like, I'm surprised Apple's going back up. That's well deserved. I don't know how Apple pulled down, but Microsoft's pulling back. Facebook, Google, and Amazon took a big hit, even though they did like 13 billion or something in 3 months. It's more than $1 billion a day in revenue. So this is really setting up a good buying opportunity. But let me finalize by saying about Bitcoin here too, folks. I've been trying to readjust my Bitcoin portfolio because I had half my Bitcoin in Wealthsimple and the other half sitting in my wallet here. And I realized that I really wanted to see if I could do this tax loss harvesting that people talk about, because apparently, unlike stocks, you can sell Bitcoin and immediately buy it back. So I took about an $850 loss on my initial investment, at which I just transferred it over directly into my wallet. I also didn't like the fact that Wealthsimple doesn't give me control over my wallet, so I feel like this was a much better transition as I continue to learn how the Bitcoin and blockchain operate. But my primary goal of Bitcoin is to get the position up to about 0.1 of a Bitcoin. For now, the entire position's worth about 3,600, and at 0.1, it's probably closer to about 5,000. And the reason I want to do this is if Bitcoin does what people are presuming it's going to do, which is go up to say $500,000 in value. It's a big speculation, right? But if that happens, my 0.1 Bitcoin becomes worth what, $50,000? And if it goes to $1 million, my little bit of Bitcoin could easily be worth $100,000. Now, I think the risk reward for this is well prevalent, because for me anyways, guys, 5,000 is like 1.5% of my total portfolio. It's really not that incremental. And for me personally, I just feel like it's a good thing, like owning gold. It kind of gets me out of the stock market, and I can use it as an emergency fund no matter where I am in the world. So I'm going to maybe finish that up over the next coming months, but that's how I feel currently about where my Bitcoin sits. And in the attempt to kind of just continue to core focus the portfolio, I've really jumped all the positions up, so that way nothing is sitting below 10,000. So every company can contribute to the portfolio in a real, meaningful, impactful way. Because honestly, guys, if I only own 5,000 or 6,000 of a position like I did with Kimberly-Clark, even if it doubles, it rarely shows up as a blimp on the radar. So I'm always trying to figure out from a risk diversified space and just from a core growth rate, I think this was the best position for me to do. So moving forward, I'm really going to focus on doing two things, primarily building up my cash position back to around 15 to 20,000, while also just trying to consistently buy into dividends, because I really want to make sure by the end of this year that my total dividend income sits between 9,000 and 10,000 annually. manually. But at this point, if you want to support this channel, folks, you want to kind of use some of our automated spreadsheet trackers that we built, you kind of like the way my portfolio overview looks, come on over to thechartmaster.com, use coupon code Passive Income Investor, 15% off. If you want to support the channel, there's no subscriptions here, really cheap one-time fees to get a lot of cool tools to mess around with. But let me know what you guys think about my portfolio in that comment section below this week. Stay cool, stay awesome, and I look forward to catching you tomorrow.